What is an ABLE account? An ABLE account is a savings and investment tool that protects access to Social Security, health, and other services for disabled people. It is criminally underused and so easy you can get it set up in less time than it will take you to watch this episode. I'd like you to help me get the word out. In this episode, I'm going to explain ABLE accounts in detail, what they are, why they are important, and how to use them, and how to fund them. As a bonus, whether your disabled child is eligible for an ABLE account or not, I'll share a roadmap that you can use to plan for their future. 8 million people. ABLE accounts are open for U.S. citizens and permanent residents with marked or severe disabilities that occur before the age of 26. According to the National ABLE Resource Center, there are around 8 million eligible disabled people in the U.S., with that number slated to increase substantially in the beginning of January 2026, when the qualifying age for disability goes up to 46. As of June of 2023, there were just 151,164 people with ABLE accounts, up from around 126,000 in 2022. That's less than 1.9% of eligible people who have an account since the law was passed in 2014. At this rate, it will take 313 years to hit 8 million accounts. We need to do much better, and you can help. Welcome. My name is Stephen Davis. I'm just a parent with a disabled child like many of you. I'm not an accountant, lawyer, or advocate. This is not official or formal advice. Do your own homework. I'm simply here to share what I've learned and learn from you. There is a lot I don't know, so if you have questions, comments, suggestions on this or other disability-related topics, please comment on YouTube, or you can reach me at disabilityalmanac.com to see if we can work together. If there are any resources, corrections, or other materials that will make this episode more useful, please reach out, and I'll try to include them in the notes for this episode. If you find the information helpful, I hope you'll share it, and if you like or subscribe, you'll also be helped spreading the word. Thank you. The Achieving a Better Life Experience, ABLE, Account Act was passed in 2014 as an extension of the 529 College Savings Plan. It is formally a 529A plan. But you should think of it as a 529 plan on steroids designed to meet the needs of people with substantial disabilities. First, it protects your eligibility for U.S. disability-related services like SSI, Medicaid, SNAP, and others. Two, it is a savings and investment vehicle. It works like a Roth IRA. Money is taxed on the way in, but not once it is in the account. Three, it can be used immediately for qualified disability expenses, which sounds boring and bureaucratic, but it includes everything from services and supports to housing and education, and there are 3 bonus features. Bonus 1, disabled adults can contribute to their own ABLE accounts out of their income, which may be fully or partially deductible. 2, employers can contribute to their employee ABLE's account. You have to be careful. 3, bonus. It looks like contributions made in some states are also tax deductible. This is a great idea for everyone, and I'll come back to it. To qualify for an ABLE account, you need to satisfy 3 requirements. 1, your disability occurred before you turned 26. This is again going up to 46 in January of 2026. This is the age at which your disability occurred, not your current age. Whether you're 8 months or 80 years old, if your disability happened before age 26, you're good. 2, You're a U.S. citizen or permanent resident. If you aren't a citizen, it probably makes sense to check with your specific ABLE account provider. 3, you have a disability that results in a marked or severe functional limitation or blindness. There is actually a U.S. official government list of what qualifies, though I suspect if you're thinking about setting up an ABLE account, you're probably already in. And I have a link to the list in the attached notes. 4, you may actually be able to self-certify, but there is a note from your doctor option as well. Again, all the details of this are included in the show notes and the article at Disability Almanac. Yes, your ABLE account grows tax-free, but by far the most important thing is that it protects your eligibility for U.S. government disability services. Specifically, ABLE accounts of up to $100,000 are not counted towards resources for those who receive supplementary Social Security income. Try to say that 3 times fast. This is critically important because SSI has severe income and asset limits that haven't been updated since 1989. You are allowed, under SSI, you are allowed only $2,000 of individual and $3,000 for married couples with a SSI eligible child in total assets. Again, that's total assets, everything. ABLE accounts are not accountable resource for FAFSA, HUD, Medicaid, Medicare, or SNAP. Though I've seen in some things I've read that this is capped at $250,000 in some other articles that I've read, I am going to keep looking into this. ABLE accounts have had some increases in contributions, but the total limits for benefits haven't been indexed to inflation since the law was passed in 2014. Another opportunity for improvement. ABLE accounts may be used for qualified disability expenses, which sounds very official, but in practice it means helping the ABLE account holder to pay for items such as food, housing, education, and other additional and often significant expenses that are associated with having a disability. In California, CalABLE will issue you with a debit card that you can use to pay for what you need directly. I think this is pretty typical for other states as well, but again, check where you're setting up your account. Sometimes, something to think about in the very long term, you may want to be able to empty your ABLE account when you die so that Medicaid or other services don't attempt to take back your funds. This varies from state to state, so do your homework. It looks like California doesn't do this, for example. There are many places where you can set up your ABLE account. There are only 4 states that don't have their own programs. Don't ask me why, but North Dakota, South Dakota, Idaho, and Wisconsin. And we're going to wait on that. There are a lot of choices as to where to set up your ABLE account. Only 4 states don't have their own programs: North Dakota, South Dakota, Idaho, and Wisconsin. I'm not sure why they don't. Talk to your local legislatures. But many states allow eligible people from elsewhere to sign up. I've heard that my state's program, CalABLE, is quite good, but you should do your own homework. Different accounts work a bit differently depending both on where you live and where you set up the account. The excellent ABLE National Resource Center has information for all of the states, but I would double check in each state that you're interested in when you set up your account. The best thing about ABLE accounts is virtually anyone can contribute. Formally, anyone that is considered a legal person in the United States, which pretty much means anyone: family, friends, trusts, corporations, pooled trusts. If you are some sort of funky legal entity, you may want to double check. Beneficiaries, though, can only have one ABLE account. So you can't set up a bunch of different accounts to contribute more. I also think that excess contributions are supposed to be returned automatically, but double check. The deposit limit was $17,000 in 2023 and was raised to $18,000 this year in 2024 when I record this. If you are going to write a big check, double check the account limit and how much has been deposited for the year before you make that deposit. Okay. You'll note I've raised some problems and issues where ABLE accounts can be improved. I'm going to cover more about financial planning and benefits for your disabled child next, but I'd like to look at how we can make ABLE accounts work better. I like to think about disability systems or improving disability systems at three levels. One, how can individuals use the system today as best as possible? Two, how can our current systems work better? And three, how can we all work together to improve the system? Number one here is easy. Just go set up that ABLE account if you or your child is eligible. Start working on a plan to fund it as fully as you can. If you aren't eligible, please talk to your friends or family about who may benefit from this program. Do not assume they know about it already. Less than 1.9% of eligible disabled people currently have an ABLE account. Blah, 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 blah. Number one here is easy. Set up your ABLE account if you or your child is eligible. Start working on a plan to fund it as fully as you can. If you aren't eligible, please talk to your family and friends who can benefit from the program. Do not assume they know about it. Less than 1.9% of eligible disabled people have ABLE accounts today. It is okay to nag a bit. Blame me. Number two, the biggest weakness with ABLE accounts today. Number two, the biggest weakness with ABLE accounts today is that they are almost a secret. You can help change that. If you found this episode useful, share it online. Check with me if you'd like me to give a presentation, and the various state ABLE account entities should be able to do that as well. I certainly know the CalABLE people will hook you up. The ABLE Account Center, National ABLE Account Center, literally has a slide presentation you can use. You can also talk to influential individuals and organizations that you have a connection with to encourage them to share the word. Schools, churches, insurance companies, financial service companies are obvious choices, but also lawyers, accountants, advocates, even your elected officials, and maybe, a YouTuber or someone who can post a video to help get the word out. If you or someone you know does spread the word, again, let me know. I'd like to thank them. Number three, let's think big. First, SSI and other federal programs should be indexed to inflation from when they were passed, and that probably shouldn't be just for disability programs. Two, next, I'd love it that some states make contributions to ABLE accounts tax deductible. Why not do that both nationally and for all states? Finally, we need to change our basic disability systems to a universal disability services insurance. I need to make an episode about this, but if you notice, our current system basically forces disabled people to have no money or assets. We needed to do this for my disabled son. It's kind of a petty and cruel system. Instead, we should move to a universal insurance system where there are no asset limits, no income limits, no co-pays, no marriage penalties. Yes, you are financially penalized if you are disabled in some circumstances and you want to get married, and no subminimum wage. This shocked me when I first found out about it, but there is literally zero minimum wage for disabled people. An episode is definitely coming on that. If you or your child is eligible for an ABLE account, it is definitely the first step to plan for your child's financial future. And planning is very important, as working with the U.S. disability benefit system is likely to be something you'll have to consider for a very long time. The next steps are in two areas: addressing your overall estate planning, perhaps including setting up a special needs trust, and working with your and the other thing is working with your state and health insurance benefit programs to ensure your child has access to all the services that are available. I'm working on additional episodes to address all these areas, as well as exciting topics like how your state is doing for disabled people and which states are better to live in. The numbers will surprise you. I also hope you'll subscribe to YouTube or sign up at disabilityalmanac.com to be notified about the next episode, where I'm going to dive deep into special education inclusion and tell you the 5 most inclusive states and the 5 least inclusive states in the U.S. You may be surprised. I know I was. Thank you.